Hello and welcome to Business Nigeria, where we bring you latest happenings and in-depth analysis in the world of business that's across the country. I am Tolulope Ogunjobi. A warm welcome to you again. Now, the Nigerian economy has experienced 12 times over the past 1.5 years, with foreign direct investment declining $4.7 billion from that to about $3.4 billion US dollars in the first quarter of 2016. The National Bureau of Statistics in its capital importation report shows Nigeria's foreign direct investment declined by 48.7%. The NBS report states that FDIs, that's foreign direct investment, show the lowest year-on-year decline in inflows at $96.09 million, a negative of 14.77%. The Bureau attributed the decline in the capital imported to uncertainty in the economy and depressed oil price. According to the report, decline in portfolio investment inflows were primarily driven by declines in equities market capital, which were lower by 49.59% year-on-year. The inflation rate in the country currently stands at 18.3% as at November this year, compared to 9.3% at the same time last year. The report from the National Bureau of Statistics said increases recorded by Consumer Price Index measured inflation on the rise since the beginning of 2016. The increase in the headline index is driven in part by higher prices within key divisions which contribute to the index. On the foreign exchange market front, the Central Bank of Nigeria, as at July 2016, in what it called new policy, floated the naira. The decision was to allow market forces determine the exchange rate. This was to allow for a single exchange rate window while closing the abused black market. Naira has since declined further at the interbank rate, currently exchanging above 400 naira the black market and 300 naira at the interbank rate. Now, the Nigerian capital market is not spared from the uncertainty in the economy, as the bearish trend in the Nigerian equities market persisted in the month of November, leaving investors with a combined loss of 600 billion naira. The market has largely suffered from declines in trade volumes and value for a good part of the year, thus weakening investors' participation and the market turnover. Data from the NSE show that by 30th November, which was the last day of trading for the month, the NSE capitalization stood at 8.7 trillion naira, while the all-share index was just a little over 25,000 basis points. Well, Chief Economist at the PricewaterhouseCoopers, Andrew Nevins, is here with me in the studio to give his perspective on what I will call a troubled economy and how we can recover from this. Many thanks for joining us on Business Nigeria.
It's great to be here, Tolo. Thank you.
Let me start this way. What's your assessment of the Nigerian economy, for over a year now? We have a new administration and a lot has happened. What do you make of it? What's your assessment?
Well, I think it's very difficult. We all know that who live in Nigeria right now. I think it's being more difficult than we predicted. I mean, when we did our scenarios 18 months ago, we weren't quite prepared for this, to be honest. I don't think the country was prepared for it. I think a big part of it is the production losses. If you actually look at the flows into the country, people tend to focus on the oil price decline. But actually at $50 oil, we could manage our way through it. But what's very difficult is $50 oil plus production at 1.4, 1.6, or 1.7. It's taken too much out. And because we weren't prepared, it's just too hard to make that transition under these circumstances. That's why it's so difficult right now.
That's the main reason why it's difficult. But finally, we find ourselves in recession, getting negative GDP now for 2 quarters. And inflation is also high up there. Everything seems to be coming up. At the same time, what are the fundamental aspects that needs to be checked now? We are trying to diversify, but we still don't have the infrastructure to do that. Where do we go from here?
Well, I mean, people are saying the right thing, right? Well, we know we need to diversify. We actually knew we needed to diversify before oil dropped, and now we have no choice. So I think there's a commitment there. I think the biggest impediment right now is we've seen there's 4 inflows into the country for FX, for example. There's oil inflow, foreign portfolio investment, foreign direct investment, and remittances. 3 of these have collapsed. Big reductions in the foreign portfolio, the foreign direct investment, and of course the oil. Only remittances have held up, and that's causing the trouble. So we can't expect oil to come back in the short term, if ever. Oil may never come back to $60, $70, $80. We need to rely on getting some investment from both portfolio investors and direct investors. That's the key to this.
So we need to get, but the issue of confidence now comes in here.
Right. So
before the election, you know, we're having some uncertainties and all that. Finally, after the election, and everybody's still believing that some are sitting on the fence.
Right, and the issue is not the oil price went down. I mean, the investors that are coming in, say for example the direct investors, they understand, okay, oil's gone down, but I'm here to invest in consumer goods, I'm here to invest in agriculture, and I don't want to focus only on the foreign investors, because of course they're domestic investors, people that have capital, that also have a choice whether they invest. But the issue right now for these people is that the country has not yet become that attractive to invest. So you know the World Bank does their ranking of ease of doing business. Nigeria is still doing very poorly. So between 2015 and 2016, we moved from 170th to 169th. That is not good enough. Kenya is much better than us. Ghana is much better than us. Even Tanzania is better than us. And Rwanda, which everyone looks to as is about in the 60s in terms of ease of doing business. So we're 169th. Rwanda's 60th. They're getting foreign investment, and of course they're a small country, so it doesn't take a lot of investment to make a big difference, and we're not getting very much.
That's really interesting. It brings me to the issue of Forex now, the foreign exchange market. We've had lots of challenges. The central bank had tried to float the naira at a particular time, saying we should allow the market forces, talking about demand and supply. But as we speak, at the parallel markets, the dollar goes for about 480 naira. Even the interbank rates, manufacturers can't get Forex to even bring in products and machineries they used to, carry out production here. What do you really think is wrong with the Forex issue? Or do you think it is more to the eyes than what we see?
Well, I have a lot of sympathy for the CBN. A very difficult situation because if you think, I mean, the big oil producers, many of the producers, Saudi, Qatar, obviously, Abu Dhabi, when oil was high, they saved something for a rainy day, right? And Saudi now has a big program to diversify, but they've got the resources to invest. Unfortunately, in Nigeria, there were a lot of people that said we needed more money in the excess crude account, we needed to save. But because of the fiscal federalist structure here, there's not control at the center to be able to do that. So the money that the inflows that we had during the high oil times are not here anymore, and we had very little buffer. I mean, no buffer, essentially. So I think it's very difficult for the central bank. I mean, they've taken this step to try to create a true Forex market, but we know it's not a true Forex market because we have the interbank rate, we have the CBN rate, the parallel rate, there's also BDCs that are involved there. And the problem with all this is for the outside investor, they're completely confused right now. I can tell you when foreign companies come, international companies come and they sit with us at PwC and they sit with me as chief economist, the first question they ask is, how does the Forex work? If I bring it in at this exchange rate, do I take it out at that exchange rate? Do I take it out of the parallel rate? And until we get that solved, I think we're going to have a lot of trouble. But I think that part of solving that is making other aspects of doing business easier. So a simple example is getting a visa to come to Nigeria. So we need people to come and invest, to put money into our economy, to help us grow businesses here, and yet we make it hard for people to get visas. So we need to make some changes like that, and then I think the Forex market will take care of itself because there'll be other players that need to bring their dollars or their euros into here.
The inflows will be higher then.
Just add total on it. I mean, the thing is, it seems so difficult now, but the truth is there's lots of capital in the world, right? And the people, everyone knows we have the biggest market opportunity left of any country. So people want to put their capital here. What's happening is we're making it hard. So they're sitting on the sidelines. If we started to make it a little bit easier, and people said, oh, I could see that Nigeria's getting a better place to do business, they want business, they're going to come. And it's going to happen quickly. So it can turn quickly if we do a few of the right things.
Okay, let's go on this break, Andrew. We'll be right back now with more on the show. I'll still have Andrew here to give insight into some of these issues. Stay with us on Business Nigeria. Welcome back. 2 minutes to 6 o'clock. Business Nigeria. We're back. We'll be right back now with more on the show. I'll still have Andrew here to give insight into some of these issues. Stay with us on Business Nigeria. Okay, let's go on this break, Andrew. We'll be right back now with more on the show. I'll still have Andrew here to give insight into some of these issues. Stay with us on Business Nigeria.
Thank you.
Glad to have you back. You're still on to Business Nigeria, and I still have with me in the studio the chief economist with PricewaterhouseCoopers, Andrew Mervyn. Now, Mervyn, giving insight into issues surrounding the Nigerian economy, inflation, recession, and all that we face at this time. I must thank you again for joining us. Now, before we went on that break, my mind went to so many analysts. We have lots of analysts now looking at Nigeria's situation. We have some armchair analysts and some people just go about. You know, they've argued that we have issues surrounding our monetary policies and the fiscal policies, that they're not working at par, they're not actually in tandem. And they say that is why we're having some of these challenges. Something else comes from the federal side, something else comes from the central bank, which is the Apex Bank. What do you make of this argument?
Well, I think that really for the last 15 years, we've been relying too much on monetary policy. I mean, the reality is that the central bank, and this is not just Nigeria, but whether it's the Fed or the ECB or the Bank of Japan, they have a few things that they can pull to manage the economy, and if it's down a bit, they can reflate it. But they're only really, in a way, buying time, waiting for structural and fiscal change. They can't, and the best analogy I've ever heard for this is the head of the central bank is like driving the race car. But if you put someone in a 1950s race car and a 2016 race car, it doesn't matter how good the driver is in the 1950 race car, he's not going to catch the other guy, right? No. So you have to drive the car optimally, but the job of building the car is up to the fiscal authorities, the business people, the structural issues in the economy. So that's the basic issue. And in this country, if we look at the fiscal situation for a moment, I mean, one of the biggest issues is that Nigeria is actually very poor at collecting taxes. So we only collect, in 2014, we only collected 8% of GDP in tax revenue. And in sub-Saharan Africa, the average is about 17%. So you say, oh, that's not so bad, at least we're halfway there. But it's not actually, it's worse than that, because we only collected a little over 2% in non-oil tax. We're mainly getting it in tax. Everyone sort of 70% came from tax back then. So we're only collecting 2% from non-oil and gas taxes. Now, that's woeful, and it means people are not in the tax net, they're not paying their taxes, and then the government doesn't feel accountable to them. So one of the big things in the fiscal area is tightening up the tax, and that's not going to the same people to pay their tax. So who pays the taxes? Telecoms, companies like PwC, Heineken, Unilever, the banks pay their taxes. They're already in the tax net. The issue is to get these companies and individuals who are not in the tax net brought in. And if you've been, I'm sure, coming to the studio, listening to your radio in the car, you've heard that the Lagos Internal Revenue Service, which has made great strides in the past
I want to talk about that
6-7 years, they're very focused on getting the tax compliance. So that's absolutely critical, because that's going to get us the revenue that we need to be able to do the things we need to do in terms of infrastructure, roads, etc.
That's great, because I wanted to even talk about the Lagos, as I want to use as a point of focus.
You know, borrow a little bit. We'll show you that we can use it to deliver services. So then you're going to, you know, when we come to you and say, now you pay taxes, we'll do that. So I think that's a perfectly acceptable way to go. Now, of course, that raises the issue, the $30 billion that the presidency wants, the federal government wants. Is that appropriate? Again, we have low debt. We could borrow $30 billion. If we take $30 billion and we do projects that add value and create infrastructure and education and, you know, help our economic growth, then we have absolutely no problem. But the concern of the critics is the government's going to go get $30 billion and then they're not going to use it wisely. Then we're going to be in a worse situation. So I think the government's probably needs to go out and take a few $1 billion, show it can do something, and then people will lend them money for that. But if we go back to Lagos for a minute, I mean, Lagos, as you said, they've raised revenue. They're doing a lot of the right things. So as a country, we're 169th in ease of doing business, but Lagos is actually becoming a very good place to do business, and the governor is very focused on it. He's raising money today, I believe, closing on a bond, $1 billion bond, and people have a lot of confidence that he's going to use it wisely. So you can see the momentum in Lagos. We need to take that same momentum and get it spread throughout the country.
Interesting. That's really very, very important. Now let's look at the trading across Africa. You know, just concluded summit, which just last week in Addis Ababa, Ethiopia, which you were in attendance. Now we've talked about improving trade, because we consider the level of trade is very low. Because if we tend to diversify, I think intra-African trade is very important. Now, what's your assessment? What we have now, where we're supposed to be?
Well, I think you're exactly right. I mean, we were both in Addis Ababa.
Yeah.
You ran into some trouble with the trade where they held onto your camera for 24 hours for no real reason. I mean, I think Africans need to realize if they don't do business with Africans, then we're not going to move forward. There is not an economic model just selling raw materials to developed nations, partially because our population is growing, so eventually we need these raw materials for ourselves, partially because the developed economies are not growing very fast anyway, so we need to rely more on ourselves. And we've cut up the continent into lots of pieces. I mean, Nigeria is a big country, but a lot of countries, Togo, Benin, Equatorial Guinea, Rwanda, they're very small, smaller land, smaller population. There's no way they can produce industries at scale, so we need to start to cooperate. Now, I think in terms of West Africa, Nigeria really needs to get embedded in this, because the danger for Nigeria is that Ivory Coast leads the way with the Francophone countries and just leaves us behind. And we tend not to always think about these issues. We think we're a big country. But if Francophone Africa gets going, it's going to be just as big as us. Its economy is going to move faster. So I think it's quite urgent, actually, to establish these trade links. Now, one of the issues with it is you have to give a little bit. I mean, we shouldn't be looking at our exports necessarily to African countries. What are our imports? We import a lot from developed nations. We import a lot from China. We should be very happy, actually, if we import it from Ghana, if we import it from Ivory Coast, because they're also going to demand things from us. We're going to get integrated supply chains. But I think it takes a real mindset shift to say it's actually okay to import from our neighbors on that. And it'll drive up the infrastructure in that and improve border security. So it's a critical issue.
Interestingly, that was going to be my next question, and I know I also asked you there at Addis Ababa. The challenges are enormous. Talking about the continental free trade area, I'm looking at the challenges because I'm getting it right in this part of the world. But I know. Yes, most of our leaders now know that they have to, they have to move away from oil. They have to think this way. But looking at the infrastructure challenge, roads, rail, even moving the produce from the farmland out to the people, to those that will make use of it. Like I spoke to somebody and I talked about some countries might be under farming and some countries have enough, and they will be taking the products to other places. So how do we marry this infrastructure challenge with this great opportunity in intra-African trade?
Well, the thing is that the infrastructure, because our population is so big and is growing so fast,
1 billion people,
that any infrastructure you do is worthwhile because you're connecting so many people. I mean, you think about, I'm Canadian, the country is empty, we build a road somewhere, it's actually, most of the new roads, they're not going to help us in any way because there's no population to use it. We build a major road. I mean, if we had a fantastic road between Abidjan and Lagos, or Calabar, or all the way out to Douane, and connected up Lome and Accra, and it would be full from day one, right? So because of that, it's worthwhile for us to do that. But just as important on that is the infrastructure into the technology infrastructure, so customs clearing, goods clearing. But I think that Africa can actually leapfrog a bit on this. There's technologies that are coming that are really going to help it. Blockchain, which people have all heard of, is one that will fundamentally change the way we do all the trading because the information will be common to all the players in the system. So if we can invest a little bit in infrastructure and also embrace technology, then I think things could turn around fast. But if we look across Africa, we know there's some success stories. Obviously, the East Africa community is starting to really gain some momentum, and a little bit like Lagos forcing other states to up their game, I think the East Africa community doing well will force the rest of Africa to say we need to get into the same sort of model. So I'm optimistic about that.
You're really sure that we could make something out of it?
Well, I'm not sure what the alternative is. As I said, the economic model, because our population is growing so fast, we need our resources, more and more of our resources here, right? And so the economic model of us digging up something and selling it into Europe or into North America, it won't sustain us. I mean, our population is growing so fast in Nigeria, we want to be wealthier. If we were wealthier at the higher population, we'd use most of our own oil ourselves. So we have to have an economy that works that way rather than just sending things overseas.
Yeah, and they bring back, and we now pay more for it. Even our petroleum products, we still don't refine here. It's a great challenge. Now, back to, yes, that takes me back to the crude oil issue again. We've heard of shale oil and all of that, and, you know, change of government also in the United States and all of that, you know. Indonesia is out of OPEC now, and, you know, the OPEC countries have asked that they want to cut production. I think they've even agreed to cut production, all in trying to bring oil price back to normal. What do you make of this oil cartel? What do you make of this, with all of the challenges? We still need crude oil one way or the other. You know, some countries still solely depend on it, that they can't diversify. I'm looking at, is it not going to get to a time where we'll start thinking, because when shale oil takes over and many people don't buy Nigerian crude anymore, that's going to be on the negative side too for us, because it's telling already.
Well, I think we need to prepare for a world where oil is $20, $40, zero.
Yeah.
I mean, it might go to $70, but when you look at the headwinds, I have a hard time believing that. I mean, Iran is going to come back in a big way. Iraq has huge fields. They want to pump more. Saudi won't lose market share. And in the shale oil, we've just got a president who's going to up exploration, support for the oil industry. And shale oil used to think was $60 cost, $50 cost. Now it's in the $30 cost, depending on the basin. So it's hard for me to see us banking on anything, you know, much higher than today, right? So we need to prepare for that world. And I actually think we need to prepare for a world where maybe it's $20, because with issues about climate change, in the United States even, I think the majority of new electricity is produced from renewables. As that gathers momentum in electric cars, what are we going to use oil for? We may use it for aviation, but I just can't see us you know, using more and more oil with these headwinds. So let's get prepared for that. But compared to Saudi's already preparing, so they have a whole diversification blueprint. But the reality is Saudi doesn't have any arable land. I mean, you go to it, if you've been to Riyadh, it's outside of Riyadh, it's just sand. Very difficult, but they're preparing for it. Here, we're sitting here with the most unused arable land in the world that could produce fantastic range of crops, very well-educated workforce in parts of the country, tremendous energy, young people. We can do lots of things other than relying on oil.
I must thank you for your time. A lot has been said. I know you can go on and on and on. Andrew Nevins here from the PricewaterhouseCoopers, the chief economist, giving his views on issues surrounding the Nigerian economy, and particularly at this time when we face recession and other challenges facing the economy. Well, I must really thank you for joining us on Business Nigeria. Thank you very much. Well, that's our package for you today on the show. Join us another time for more comprehensive analysis and insight into topical issues. I am Tolulope Ogujobi. On behalf of the entire production crew, I must thank you for watching.